when the market transitions from a flag pattern to a channel, it means momentum has died. I mean, let's think about this practically. A flag pattern has a very aggressive move in one direction. Then it has the market trading between two fixed points for a short amount of time. Typically this happens where the market breaks through a resistance point and then it trades down into support. I mean, hopefully by now you've seen me predict flags and pennants so many times. I mean, it's child's play to predict a flag or a pennant. Because all you have to do is look for momentum and look for the market to trade down into support. That's it. And what you're witnessing is the market balancing out the buys and the sells. The reason why you typically have an aggressive move outside of a pennant or a flag is because of this initial momentum here. The thinking that went into place, it still exists. The traders are still thinking the market should be higher. They just have to sort out the sellers and the buyers here. Once all that gets sorted out, boom, you see the market continue. Okay? That's exactly how it works. You also have a tunnel pattern in there. Okay, hopefully you're following me here. You have a momentum move where traders are thinking price should be higher. You have the market consolidating into support. And then you typically have a breakout. That's a flag. Well, when it stops being a flag, what happens is the market simply trades in between two very well-defined channels. Support and resistance. Resistance on the top, support on the bottom. Let me get back. Whoops, let me erase the drawings. Now let's zoom in here on this channel. And you know what? I'm sorry, I almost forgot. I don't have an exact figure or an exact way of looking at a flag as if it's gone on too long, other than to say, in my opinion, if the market has come down into support, so we're looking at this point, we're looking at the flag, right? Okay, let me kind of draw this in heavy. We've got the flag right here, okay? Once the market pushes back down and breaks through this point here, where the market is pushed into support, that's a good sign to me that, you know what, momentum to the upside just, it's not able to continue. We had a false breakout. We've got a couple of big bars right here indicating that there's selling, aggressive selling for an entire session. The buyers just could not get price to come up. Both of these bars closed near the bottom. There's just not enough momentum. There aren't enough traders in this area that are willing to buy heavily to give a momentum move. So that means that the likely direction of the market is going to be fixed between support and resistance. This is where we shift to target-based trading. This is where, again, we look for the market to push down aggressively. Remember, at the specific time of the day. You've got the London Open. For those of you on the East Coast that don't mind getting up early, or other parts of the world that are awake at that particular time, if you see the market pushing down aggressively into support, that's a very good time to watch for the market to hold that support level. And once you see it holding support, that's when you can look for the particular entries that we went over before. And I'll go over them again. We've got a couple of minutes left here. And of course, you're going to have a target of the upper side of the channel. And again, you can see that this took 1, 2, 3 entire sessions for the market to get back up here. So 72 hours later, roughly, the market had pushed back up to the upper end of the channel. So what are we thinking when the market gets back up here? Well, we're thinking a couple of things. Number one, and it's like I said in the course, I don't think anybody really appreciates or understands why this stuff works. I have my theories.